Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Sunday, May the 22nd. The year's 2022. Let's talk trading. Weekly open and gap. These videos are for educational purposes only. Your results may differ from mine. And we're coming into the last full trading week of the month of May. So let's just remember to have our risk management in place so we don't lose any more than we're willing to lose on any one single trade. Quick look at the monthly chart here. Oh, wow. You can see we have moved 396 pips off the low. We're only 25 pips below the monthly open and 87 off the close. Now that's quite the move today, or this month. As far as today goes, the gap is filled. It pound gap down, so we would definitely want to go long. We still have a few pairs that haven't filled that weekly open gap. And we are in the opening range for the month. As I just stated, we are right now 26 pips below that monthly open, 47 below the high of the first day of the month. So quite the move today. For the year, 976 pips below the yearly open, 395 off the yearly low. And we had an inside bar on Friday. In fact, we had a lot of inside bars on Friday. It was kind of a muted trading day, but you can see we broke out of that previous session's high. We're 51 pips above it right now. So you inside bar traders, you got paid off. And if you look to the left, you can see here we broke out of these wicks, and then we also broke out of this wick. Quite the move. 82 pips of range so far. We do have one pair over 100. We're about a little over 7.5 hours into the trading day. Buy zone we had one signal during the first hour, and price has not looked back. We have a range large enough for rats. So red rats look to find a short trade there. See if we can come out of that rat zone, pay off the red rats. The Bambino flex indicator indicated a long. It said near the pivot was short. We weren't near the pivot, near R1. Well, we hit R1, broke it, and even ran up to R2 and broke that. R3, 2574. Let's call it 2575. We're 24 pips below that. Let's see if it might even get that high. For the pivots, we took out today's pivot. We still have two missed pivots for the month of May. The wick zone, just in and out of that daily. You can see we came back, touched the high, which was right around, he might as well be 1.25, 1.24994. So that 125.00 price just pushed up another 50 pips. Looking at the smart ranges, 84 pips so far today. We noticed what happened last week. One thing I didn't do Friday, so I'm going to go ahead. We're going to take a look at it today. Is the year-to-date ranges. So right now you can see we've expanded the range once again in the month of May, 1594 pips total range this year, and you can see it looks like we're about somewhere on par for May. We can manipulate the indicator, change the inputs, range by month, 483. So looks a little low compared to the other Mays here for the last 20 years. We beat last year. We're still below 2020, 2019, beat 2017. Let's see what else we have here. Do the close minus open. You can see we've had 5 red months in a row. Most of these Mays are red, but looks like we might just pull off a green one if price keeps going the way it's going. And let's see. Close minus year-to-date open. As you can see here, we're still way below. And let's see, let's go back to the charts here. The high minus the previous high, we've already broke it, 28 pips at the moment. We didn't break out of the low, obviously. High minus close, we pulled back 5 pips. Close minus low, 79. Didn't really get that rat zone trade because there wasn't enough room there, but the buy zone trade definitely paid off. High minus open, 84, open minus low, 0. We just started and just moved up from the get-go. One thing to notice, the seasonality indicator, price peaks in very early May and is bearish till mid-May. A bottom typically forms in mid-May, and it looks like that has definitely happened here. Looking at the Wall-Mall lines, even though we don't trade Wall-Mall during the first, about 12 hours of the trading day, we've had some nice movement for the Sunday or / early Monday trade here. Notice we got into the launch pad and it did launch up. Launch pad being 40s. And if we're looking at just the highest open, lowest open trades, simple price action trading also, you can see we had a trigger here, lowest high, price moved up, and we'll have a highest low trigger right here, looking to go short. There's something I'd like to share with traders, and it's something that I've talked about, many times over the years. And it's that good trading really is boring. Okay, and I got this in an email today. It says the greatest threat to results are boredom and impatience. In other words, you're doing something and it's working, you get bored with it, you get impatient, you want some action. But this email went on to say the only way to become good at something is to practice the ordinary basis or ordinary basics for an uncommon length of time. Now, that doesn't sound like fun, does it? But if you're in any art, any skill, any sport, any trade, you have to do the basics. You have to get those down before you can move on. And the basics, after a while, get boring. But as I mentioned, like I said years ago, to become a black belt, you only need to master 6 things. But you have to master them. You don't need all those fancy flying, spinning kicks. You don't need that stuff. 6 things that you do over and over and over and over again. But that's how you master. Repetition, it's the mother of mastery. Trading these horizontal lines. I mean, if you go back to my videos when I first started this, and you look at some of the old videos and you look at, my latest stuff, there's really not that much difference. Yes, I've come up with some new indicators and I have added a couple of systems, but they're all based off of the basics, trading at a horizontal line. Those horizontal lines, the highest low, lowest high. I mean, that's just pure basic price action. Nothing fancy. No fancy formulas. It's something you don't even need an indicator for. I mean, you look here, price was made a lower low, then price made a higher low. And then you see here, price went to break the high of that candle. It came back, tested to about the midpoint, turned around, went green. Somewhere in here you go long, and you pick up a few pips. And the thing is, it's a lot easier to make 2 pips 10 times than maybe making that 10 pips or 20 pips 1 time or 10 pips 2 times. I mean, you can look at a chart and you can see all the opportunity, but to be in the trade for that length of time and not trigger a stop, it's something that's difficult. So, if you look at some of the other traders out there, they come up with a lot of fancy stuff to do. I mean, some people might go, yeah, but RumpledOne, you come up with these frequency distributions, all these statistics, that's fancy. It's like, no, actually, it's just basics, at least to me. Might be something fancy to somebody else, but that's just basic. That's just measuring price movement. That's just, running some simple statistics on it. I mean, I'm not doing anything that takes higher math. No quantum stuff, no derivatives, none of that stuff. No integrals. I mean, I learned all that stuff back in high school and college, but it's not necessary here. Just pure statistics, which I learned in college too, but just the simplest of the statistics. Nothing that complex. But I know it's really tempting to want to have something that, looks really cool on the chart, sounds really cool, but when you get down to it, it's just this basics. And I'm just so of the mind that even with all the methods that I've created, it's almost like if you sat down at a computer and somebody clicked the mouse and you determine, oh, they went long or they went short, what do I do next? That's what you really have to master. Because yes, we've got all these cool methods that get you in the trade, but once you get in the trade, now it's up to you to manage that. And that's the work of trading. All that other stuff, the analyzing the charts beforehand, yeah, that's part of it too. There's something to be said for it, but where the rubber, meets the road is when you click that mouse, you press that key, and now you're in a trade. It's a whole different thing. No statistics going to save you. You just have to manage that money, manage that trade, manage your risk, and hope that the market smiles upon you and that you're quick enough to take the profit. You don't hesitate when the market smiles upon you. Because I think I did a video last week when I said something like that, and the price snapped back so quick, it was almost like I had planned it. It was just too funny, but that's just how it is. So traders, ponder those thoughts this week when you're trading, because it's not what you trade, it's how you trade it. So go out there and drain the banks. Hope you have a profitable week, and I hope you had a fun and safe weekend. This is the Rumpled One, over and out.